All right, well, thank you, everyone. Great. I see we have like really good participation in terms of numbers, and welcome to our session on the IFC ESG performance indicators, and also a discussion of our collaboration with our colleagues from Arabesque, who will be talking to us today about ESG Book, which is an ESG data platform that was launched in December of 2021. Personally, was so excited and thrilled when Aditi and Felipe asked me to kick us off today, because for me, this feels like the marking of a milestone. Like many types of innovations at IFC, this work came out of a series of investment transactions that we worked on over 3 years ago. And the last 3 years have really been a journey, both in terms of experimenting with new types of investment structures, but then also, as often happens, creating certain types of standards and tools, both to support our own due diligence internally, that we then realize have applications for markets externally. Today, not only will we talk to you about the ESG performance indicators, which we believe have the potential to be IFC's flagship standard for capital markets, but also work that we're doing to embed these performance indicators into data frameworks globally. If we can go to the next slide. Before we get started, I'd just like to help provide some context and remind folks that all of the work that we're talking about today really fits into IFC's ESG integration strategy for capital markets. IFC's mission for capital markets is wide-ranging. We work across the spectrum, not only to develop local capital markets, but also, of course, to deepen, broaden, and support innovation. And certainly through our own capital, as well as leveraging the capital of institutional investors and other asset managers to access global capital to help our counterparts in emerging markets meet development goals. If you think about IFC's own ability to invest our private capital in terms of our private debt and private equity investments, and compare that with the potential that there is for institutional finance to make an impact in capital markets, our own contributions are dwarfed. So clearly finding a way for IFC to engage with institutional finance and help leverage institutional finance to help emerging markets meet development outcomes has to be a core part of IFC's strategy. However, I think as many folks know, IFC's background really has always been as a private debt and private equity investor, and our real strength has been in developing our project finance, corporate finance, and financial markets work. What we have had an opportunity to do over the last 3 years is to really take our expertise in these areas and leverage it through the creation of the ESG performance indicators to help promote transparency, as well as set standards to support ESG disclosure and asset allocation. As I said, often a lot of our innovation really begins with our work in investment transactions. And I'm going to pass over to my colleague, Piotr, if we can go to the next slide, Aditi, to talk about how this work with Arabesque really came about in the context of work that we did to support investments. Piotr, over to you.
Thanks, Aditi. So just a few words of background and history. So in 2016, 2017, our colleagues on the investment side, primarily FIG, they started looking at a number of potential transactions that were capital market focused. One of them was about investing in green bonds issued by financial institutions operating in emerging markets. Another one was quite similar, focus on corporates. And it was quite obvious from the very beginning that the traditional approach for environmental and social due diligence that we require or we expect from our FI clients would not work in this particular case. So in capital market transactions, first the pace is super fast. The decisions are made fast. The second thing is that most of the decisions are based on publicly available information. So the asset managers, they basically need to analyze what's in the public domain. And as you can imagine, when we started scratching the surface, trying to understand what is available, how it is packaged, we found a lot of issues. Yes, so as you look at the slide, it was the issue of the lack of uniformity in ESG reporting standards among various issuers. Another thing is that most of available data, regardless of the quality, was primarily from issuers operating in OECD countries. Then there is the issue of what the issuers report on, and then as I mentioned, each data provider, so companies who are focused on gathering data, analyzing data, and packaging this data in different forms. They use different type of methodologies, and sometimes coming up with contradictory results based on analyzing the same type of ESG data. Again, with the caveat that many of those methodologies are not fully publicly available. So we had a lot of issues to deal with, and one of the ideas was that we need to look at something that first would be as close as possible to objectives of IFC's performance standards. Yes, so to be in line with IFC's sustainability policy. So we started thinking about indicators, and Aditi and other colleagues will talk about them in a couple of minutes. But basically, we were trying to come up with a set that would reflect, to the extent possible, the objectives of the performance standards. And then, another thing was about extending the scope of coverage. So it's not only, as for IFC. OECD, it's not OECD countries are not particularly relevant from the investment perspective. It's about issuers in emerging markets. So the question is how to extend the scope of coverage. So to make the long story short, we came up with the idea of RFP, and basically we reached out to a number of ESG data providers to check their interest in developing something that would be publicly available, that would be developed or collected, in line with our KPIs, and something that would cover issuers in emerging markets. So we issued RFP. Eventually, we received a number of interesting proposals, and eventually we selected Arabesque, and we have Arabesque with us today. They will talk about the company book also during this presentation. And I must say that from my perspective, there were two main reasons why we selected Arabesque. One was related with the fact that in addition to traditional way of collecting data, at that time they were very interested also in exploring artificial intelligence type of mechanics to gather and analyze data. So it was quite compelling. And another thing which was really important, from my perspective, from an ENS risk management or ENS risk officer perspective, is that Arabesque was willing to disclose raw data, which honestly is something fundamental in assessing risk. So it's not only about dependence on methodologies developed by various data providers, and some of them are quite reasonable. But again, as I mentioned before, sometimes they also lead to contradictory results. So just to give you an example, one of our clients, has been using, I think, 11 different ESG data providers to collect data. Then they had to develop their own methodology somehow to take all this data into consideration and come up with their own, scoring or their own methodology that would give them a certain level of comfort. About the quality of ENS performance of particular issuers. So, when you have access to raw data, first you can do it much faster. You could also, better reflect your own, scale of sensitivity. Yes, again, certain things are more important for some issuers than for the others. Especially those that have other DFIs as investors, should be quite sensitive about certain type of issues, and the fact of availability of raw data, as I mentioned, was a huge factor in our decision about moving ahead with Arabesque. So let me stop there. You will hear from Aditi, and you will hear from colleagues from Arabesque about exactly what happened and how it looks in practice. But it's quite an interesting journey. It's, as Attia mentioned, something innovative for IFC. And I don't know whether you remember Philippe's commitment of moving from billions to trillions. The only practical way to do it is through capital markets. So I believe that going forward, this is something that IFC is going to be more and more interested in, will be more and more involved in, and I would consider the current phase as an initial one. It's a start for IFC, but going forward, we would need to think much more about the way how we manage ENS risks in capital market transactions. Different type of instruments, whether we talk about equity, whether we talk about fixed income assets, and then within fixed income assets, about different type of instruments with different characteristics on the ENS side. So it's the beginning of the journey, but something that I believe many of you will face sooner or later, both on the fixed side, but also on the real sector side, when we will deal with individual companies issuing their equity or bonds, and IFC being interested in being one of the investors. So let me stop there, and I believe you're going to have a super interesting session ahead of you. Thanks. Bye bye.
Thank you, Piotr. So thanks, Adya and Piotr, for setting the context of how this project came about. And Adya and Piotr were also instrumental in developing IFC's ESG performance indicators. So the indicators themselves are really a sustainability data framework to support ESG data reporting and enhance sustainability reporting in emerging markets. And that's important because really we felt that there was a lack of reporting standards that were unique to emerging markets. So really what the indicators do is they distill the most material information from IFC's performance standards and corporate governance methodology. And the indicators have been developed specifically for capital markets. So as Piotr said, they can be answered based purely on publicly available information, which makes it easier to do a quick turnaround when you're assessing an issuer. Whereas, the IFC would typically spend a week with a private client, do their due diligence. So under those circumstances, the indicators can be used to make a much faster assessment. They're also IFC's first integrated ENS and CG tool. And they were originally launched in 2018 in our disclosure and transparency toolkit. Since then, they've gone through many iterations. We've tested them. We've spoken to a bunch of asset managers, got a lot of feedback, and we finally published them online last year in June. So we finally have, so the indicators, we have indicators for FIs, for financial institutions, and separate ones for real sector, for corporates. And then again, we have separate indicators for ENS and separate ones for corporate governance. So this diagram kind of shows you how many indicators we have. We have 13 for ENS ones for financial institutions, 20 corporate governance indicators for both FIs and corporates, and 43 indicators for the real sector. What these colors tell you is each indicator has been weighted based on its materiality, based on the level of impact on performance. So the red ones have the highest impact on performance, the yellow ones are more medium, and the blue ones have a more reasonable impact on performance. And we'll go into the indicators in a second so you get an idea. So these are just the indicators for the ENS indicators for financial institutions. Some of them are similar to the ENS indicators for corporates, but for the same indicator, the weight might differ depending on the importance of that indicator for that particular sector. So for financial institutions, as most of you know, we usually apply only PS1 and PS2. So the indicators have been distilled from those two performance standards. Really, the main focus here is on having an efficient ENS management system. So the red indicators you can see are around ENS due diligence process, portfolio ESG periodic monitoring, making sure that E&S capacity is commensurate with portfolio risk, compliance with national labor and employment law, and so on and so forth, going down really in terms. And the hierarchy we've used here is really our own mitigation hierarchy that we apply to the performance standards. I'll hand over to Chuck quickly to cover the corporate governance institutions for corporate governance indicators for financial institutions. Chuck, over to you.
Sure. Thanks. So what I'm going to say about these indicators, I'm going to return to a little bit later when I talk about the indicators for corporate. So these indicators are in line with the 2019 updated IFC corporate governance methodology, which integrated aspects of governance of E&S issues. They're also based on the universe of KPIs and metrics that we looked at in the build up to developing these metrics. They're also were tailored, especially the risk response area, to some of the key issues related to corporate governance that arose in the 2008 financial crisis. And they're also tailored specifically for emerging markets, as both Piotr and Aditi have said. And I'll give you an example, and how the example relates to the specific indicators that we have. So we have 20 for corporate governance. And so in corporate governance at IFC, we did a corporate governance portfolio study back in 2016, 2017, a comprehensive study. And we were looking at what were the most significant corporate governance risks that our clients faced, as well as what was the link of specific corporate governance issues to better performance. And when I say better performance, I mean profitability, reduced risk, reduced credit rating, reduced ESRP scores, E&S risk ratings. And so if I just want to highlight 6 indicators really related to that study. So these were the top indicators that there was a link for performance. So first of all, you can see under commitment, the company has a written code of conduct. This was a top indicator. And this is an indicator where we ask whether or not the company has a code of ethics or code of conduct, which is the equivalent. Moving over to the parameter for structure and functioning of the board, the most influential conduct for companies tended to be whether or not there was an adequately composed audit committee and there was adequate board independence. Moving over to the control environment, where actually the top several indicators in our study overall were related to the control environment. And as you can imagine, these were much more amplified in companies and especially financial institutions after the financial crisis. So in that area, we see whether or not there's an internal audit function, and that's one of the indicators, whether or not there's an IA function, and if there's a charter establishing the roles and responsibilities and independence of the internal audit function. Risk governance, of course, was an emerging theme post-financial crisis. And you'll find that both under the control environment and disclosure and transparency, as well as the expanding need for risk disclosure. Under minority shareholder treatment, one of the key indicators that we had in our portfolio study, and I can say anecdotally in the diligence that I work on listed companies, whether or not the company has an adequate framework for related party transactions and whether or not they have a policy that govern that. And then, of course, our new parameter of corporate governance in the CG methodology is governance of stakeholder engagement, and therefore FIs. We're looking at whether or not the FI has an adequate external communication mechanism. And then just keep in mind the risk ratings. You'll see the different colors that indicate the risk ratings, and then you'll see the difference when I talk about the corporates later. Thanks, Aditi.
Thank you, Chuck. Coming back quickly to the ENS indicators for corporates. So these are the first three, and then I'll go to the next slide, which have the other five. As I said, for corporates, we include all 8 performance standards. So there are many more indicators over here. Important ones are identification of ENS risks and impacts, affected communities, GHG emissions, protection of contract workers. You can see some that, something like forced and child labor, those we have sectoral indicators. So depending on materiality, whether they come into play or not. We are in the process of developing a scoring methodology around these, and I'll speak a little bit more to that in a couple of minutes. These are the rest of the performance indicators for corporates. Again, the red ones are security force impacts community, contribution to health impacts, impacts on indigenous people, cultural heritage. But really, we've distilled, the essence of all the performance standards and adapted them for capital markets. Chuck, back to you.
Yeah, that was quick. And I'll be rather quick on this slide as well. So you see, it's the same 20 indicators for corporates as FIs, but really the difference here is in the weighting. As you can imagine, for an FI, the areas of risk governance, which was the top indicator under control environment, is more heavily rated for FIs is more heavily rated than it is for corporates. Likewise, the risk disclosure rating differs from the risk rating weight that we have for the FIs. Internal audit tends to be a higher indicator of performance for corporates, and I think that's because it's more or less a given that financial institutions, banks have more robust internal audit functions than non-financial institutions. Hence the more the risk rating for the non-financial institutions. And then lastly, there's a little bit of difference in the governance of stakeholder engagement indicator, whereas for FIs, we're really looking at whether or not an FI has a ECM, and for corporates, it's more about whether or not there's an adequate grievance mechanism for affected communities. That's all I really wanted to say. But if you really want to see the differences, you need to kind of put slide 9 and slide 6 together and examine the difference in the weighting, and that comes through in the scoring that Aditi referred to as well. I'm back to you, Aditi.
Thanks, Chuck. So just to say, yes, that was quick on my part because I'm mindful of the time, but all the indicators are online. We'll share that link in the chat, and you can download all the indicators from there. As Chuck said, you can compare the ones for CG, for FIs and corporates, and all the color weights are on there as well. So please feel free to explore that site. Coming back to how we've used the indicators and the indicators in action. So as I said, we did do extensive testing. We spoke to a number of asset managers, including BlackRock, Amundi, Nuveen, BMO, multiple rounds of revisions from our own ESG specialists before we finalized. We helped Amundi in terms of scoring some companies that they requested us to as input into their own issuer selection strategy. I'll let Chuck cover the point on regulations, but I'll just cover. Sorry, Chuck, go ahead, and then I'll go back to the next few points.
Oh, okay. Yeah. So also we found the indicators a rather useful tool in our enabling environment with regulators and stock exchanges. And so, for example, I'll give Peru as an example, where we were asked for a consortium, a public-private sector dialogue called PIR or PIR in Peru. I'm not going to say in Spanish what that stands for. So essentially what they were looking for, this was, Peru's a little unique in the way the capital markets works there. It's really controlled by the banks and the financial institutions. And so what they were looking for is kind of a voluntary system of indicators that were correlated to performance. And they asked IFC's assistance in developing some indicators that they could beta test on a comply or explain non-mandatory basis. And so we had a number of workshops with them starting back in 2018, I believe. And then we basically mapped the IFC ESG indicators to things they were thinking about. And then they derived a set of indicators. They went through an annual reporting period where companies voluntarily reported on these. And they caught so much gravity and attention in the market that, for example, Bloomberg in Latin America started reporting on these indicators for Peru as well. And then the securities regulator there, more or less the equivalent of the SEC for Peru, got involved, and then they developed actually a mandatory disclosure regulation based on these indicators. And the approach we took there was similar to the IFC ones, where there was a set of indicators for FIs, and then there was a set of indicators for corporates. And then, in fact, more recently, they've come back to us as they're developing a set of indicators for the mining industry, as is prevalent in Peru. And then we've taken somewhat of a similar approach in other jurisdictions, including Kazakhstan, Ukraine, actually, some of the regulations and stock market listing guidance there utilizes the indicators as well as Kazakhstan.
Thanks, Chuck.
Should I talk about the investment use as well, since
Please do. Sure.
Yeah, and sorry for the highlight there. That's my mistake. I was looking at the slide right before the presentation, and I guess I did that on the shared slide. But basically what we've done is, at least for the CG indicators and the scoring, IFC was involved in some capital market transactions where they wanted to look at companies to have an early look at the corporate governance. And we utilized the IFC CG performance indicators to give a risk rating for those companies. And what was actually very interesting for you, especially you CG geeks, to note, is that some of the companies that were listed that we tested had actually had a corporate governance assessment or a corporate governance review conducted by IFC in the past. And we ended up comparing the analysis of the corporate governance methodology parameters using the indicators with the actual diligence conducted by the teams or a CG specialist, and it was very similar. We came out really in the ballpark of the same risk ratings on each of the parameters, and I would say for the ones that we back tested, we came out with the same overall CG risk rating. So I'm signing off. Thanks.
Thanks, Chuck. Okay. So before I introduce Arabesque, I'll speak to the scoring for a minute. So we have been working on developing a scoring methodology around the indicators. It's in back testing. We've tested it on quite a few FIs and corporates, and even that methodology has evolved over time. Basically, you can use the indicators. As I said, there's separate indicators for ENS, separate ones for CG. You could score just ENS or just CG, but you can also combine the scores to come up with a final percentage score. The idea being that then you can compare scores across FIs or across corporates. And really the way we thought of combining those scores was for FIs in the ratio of half and half, just given the number of indicators, which is 13 and 20, but also materiality. And then for corporates in the ratio of 2/3 in terms of a weight for the ENS indicators and 1/3 for CG indicators, again, based on just the number of indicators, because there are 43 corporate ENS indicators versus 20 CG ones. And so we're continuing to build out that methodology. And, once it's finalized, we will also reveal that. And then finally, moving back to what is really probably our most important collaboration with these indicators, which is with Arabesque and which is with ESG book. So Piotr gave you the background on how that project came to be. And Arabesque was selected through an RFP. We've been working very, very closely with them over the last few years. They've been developing ESG book, their platform, and they'll tell you more about that in a minute. And really, IFC's indicators are one of the pilot standards on ESG book. We're very proud to have them there. And Arabesque is also collecting publicly available information on a number of pre-selected FIs and corporates and disclosing that information on ESG book, really with the intention of, improving ESG disclosure, which is really the gap that we're seeking to address. Also to say quickly that this whole initiative has been funded by IFC's GBTAP program, and that's how it came to be. So Tigist, I don't know if we're breaking now for questions as we had discussed, and then we can hand over to Arabesque.
Yeah, there are on the chat. There are no questions, but at this time, please raise your hands and you can unmute yourself to ask questions.
Come on, everyone. I know you're not shy. Please jump in. I will also say that after Simon and Ina finish their demo of ESG book in their presentation, we will have a few more minutes. So if you are still articulating the question in your mind, please do ask later, and you can post it on the chat. I'll be keeping an eye on it and then raising it as appropriate. There's always that uncomfortable silence, so I'll keep speaking. So if you want me to shut up, you got to raise your hand or post a question. Well, it will come up to them.
I want to call on people if we don't get a question.
That's a good idea. And Alejandra, my hero, please go ahead and ask a question. Thank you for jumping in.
Luckily, I raised my hand not to get you silent. Sorry about that. And my question is, what are the next steps now that we have? This is incredible. I really like this project. And what are the next steps? Where do we go from here in terms of integrating more the data? Are there any steps like, for example, now that we have ENS parameters guided, and we know also that some CG aspects are intertwined with ENS, what are the next steps? Like, for example, are you thinking in merging some of the indicators in terms of making the ENS people work more with CG? Thank you.
That's a very interesting and loaded question. I'll leave it to one of the specialists to answer. Chuck has an answer.
I can answer that from a CG perspective. And I think we thought long and hard about this. And, we really wanted to limit the number of indicators. We didn't want to have 101 corporate governance indicators. We easily can. I mean, there's that many data points in the IFC corporate governance methodology, but we wanted to be efficient, you know, and I give you one example of efficiency. Actually, one area that relates to two examples of efficiency. So internally within the corporate governance indicators, you know, some may notice, well, there's not an indicator on, you know, whether or not a company is preparing international financial reporting standards and preparing financial statements that are audited in accordance with international standards on auditing. Well, inefficiency, if you think about it, we're looking at companies in capital markets, and any reputable exchange is going to mandate that. Hence, that's not an indicator, but because that's really an expectations and would be a very rare exception in a reputable market, whether or not that's an indicator. So therefore, we don't have that as an indicator, but it's inherently assumed. Another example of that would be the risk. Another example related to the indicators vis-a-vis the ENS ones would be the risk indicators. As you look at the ENS indicators, there's more specificity in the risk indicators. There's more granularity. Well, in the CG ones, you don't have that. It really focuses on whether or not there's a risk appetite statement and adequate risk disclosure. If you go into the IFC methodology, you have a lot of questions and issues around non-financial risks as well, but those are captured in the ENS ones as well. So we didn't see the need for duplication. And also you'll see in the stakeholder governance of stakeholder engagement, we only have one indicator there on the CG side, and that's because a lot of the granularity is covered in the like the PS2 ones, and the PS is about affected communities. So therefore, we didn't really have to go into the granularity. So they're very complementary. You know, yeah, they can be used standalone to really just kind of measure the governance, but when they work together, they work together a lot better because of the synergy, and really you can produce a more holistic ESG risk rating. I'll let an ENS specialist expound upon that if they have another view.
I'm pleased to see that there are more questions coming up, so I'll give the word to Lei. Lei.
Thanks, Felipe. This is very interesting work. Where I was listening, I thought I need to shoot you guys an email to set up a meeting, because this is, will be for us from SRT perspective to learn, because we are actually working on to set up KPIs for us to track. And I really look forward to hear the details of all those indicators. But first off, a general question. So are all those indicators, would you consider them more, compliance oriented or impact oriented? That's, I saw the list, but I actually do not know what exactly the indicators. You have like which category they belong to, which area they are in. So I look forward to learning more. I guess this will be discussed in the following slides, but this is a general question. And also, I will look forward to more discussion. And also, if you go back, Aditi, could you go back to maybe 2 slides back? So some of the, you have a different area, the color indicating the importance of it, but some of them are like a white circle, surrounded by purple color. What does that mean? And so, and some other, I mean, just following what Chuck mentioned, that indicators, you don't want to have too many indicators. So, I mean, just thinking about what when we put in SRT, I mean, that's what I'm also would want to be careful about, because nobody would be happy to check. I mean, we want to focus on where things that really matters, either risk or impact. So you don't want to have too many, and then you will get garbage in, garbage out. That will be meaningless to do it. So that's just my some initial reactions, and I look forward to hearing more. Thanks.
Thank you, Lei. In the interest of time, let's go to Vladimir and then Cecilia, and then we can tackle all three comments and questions together, and then hand it over to Arabesque. So Vladimir, thank you for joining.
Thanks. Hi, colleagues. Chuck, nice to see you all. So I have a couple of questions, and I think you could provide a short answer. Maybe I can follow up with a detail later. So the first one would be, are these indicators strictly reserved to companies that are listed? So more or less, we are talking about joint stock companies. That would be the first one. The second one, what is the correlation with the indicators in the toolkit, disclosure and transparency, where we were involved as regional teams in drafting those? And the third one, and maybe I can follow up with Aditi on that, is how to corroborate, basically corroborating these findings that we come up based on these indicators. What would be documentation? I know there is some guidance in the documents that Aditi shared, but just briefly, thanks.
Thank you, Vladimir. Cecilia.
Hi, Felipe.
Hey.
Hi. Well, I have actually two questions. One is on financial institutions when we talk about environmental and social performance indicators. And one of the indicators on the risk management section is about a statement of intention regarding ERS. So I would like to learn more about what it means. And the second one is related to contextual risks. And why I'm asking that is because then if we have to compare indicators from one FI from one country to another one, maybe we want to do that. We have, of course, different performances, and talking about the Secretary of Environment in a country. For instance, there are temporary licenses, etc. So when we just take care of a portfolio in one bank, it could be different from the other one. So I would like to know what is the best approach. Thank you so much.
Thanks, Cecilia. So I'll start late with your first. I think I'm delighted to hear that this will trigger more meetings, and I'm not saying that jokingly, because I think the more we present these indicators, and also you'll be, I think, when we get to the ESG book, also interested in learning more about it. That's exactly what we want to explore, is to talk to people. Everybody, they look at those indicators and they look at ESG book and they immediately think of more uses that we could have for those. So that is, I think, really helpful. Chuck, I think you volunteered to answer Vladimir's question, so I'll hand it over to you, and then maybe one of us can take on Cecilia's questions.
Sure, and I'll be brief. So Vladimir, regarding whether or not first of all, it's very nice to see you, buddy. Secondly, regarding your first question, are they strictly for listed companies? Yes and no. I mean, they are derived from at least the CG ones are derived from the listed company paradigm, and as well as the FI paradigm, right? So if you were to think about those indicators and to match them up with, say, the matrix from those paradigms, you would see those indicators coming through. And it's really about the risk ratings. Can you use these for, say, a family-owned or closely held company? Sure. you might want to tweak the risk ratings a little bit and move around the expectations, but absolutely can be used for arguably a family company, a closely held company, even in an SOE, you just would probably want to rearrange the ratings accordingly. And then your second question, I think, was about correlation and linkage between performance. Yes? Yeah. Okay. So yeah, that's of course there is. And I would say, like when we were devising you asked for correlation between these and the disclosure and transparency. Yeah. Okay, excuse me. I wrote down the question wrong. Yeah, absolutely. The first draft of these were from the disclosure and transparency toolkit. And then we did a lot of research, we tested them, and then Raleigh goes back and she'll update the ones in the D&T toolkit accordingly. So it's actually, the first glance of these was from the D&T toolkit, which, Atia, Aditi, Piotr, and I were involved in helping to develop those indicators. We extracted them from there. We fine-tuned them, and then they go back into the D&T toolkit as well. Absolutely.
Thanks. Basically, that was my question, because now we are looking also at some this new EU regulations, and we want to do some comparison. And basically, I was thinking probably, so these are like the indicators. We don't have to look at the ones at the disclosure and transparency toolkit, because these are based on that, and we're going to be updating the toolkit later. So
yeah,
thanks.
I would definitely recommend that, and then I would also recommend, as Leah and Felipe alluded to, loop back to us and let us know your experience, because the indicators should not be static, and they're going to evolve over time.
Thanks. And also on the usage, because my initial concern was when I look at this, okay, but if these are only reserved for capital market companies, that is the listed company JSCs, that would significantly impede our ability, especially in the emerging markets. But thanks for clarifying this.
Yeah, I wouldn't limit yourself. Yeah. I mean, some adaptation would be necessary. Yeah, but I think these are a great basis. I think these are a great basis even for SRT. And one thing I did on the CG indicators is I made sure and mapped that they were in the SRT CG ones as well when I commented on the SRT tool.
Thanks.
Thank you both. Aditi or Atia, do you want to tackle Cecilia's question?
I think
I can tackle it. I mean, can you remind me what it was?
A statement of intention regarding ENS, right, Cecilia? That was your question for the FI indicator?
Yes.
Sorry, can you just expound on that? What is the question? Why do we have that indicator?
Yeah, the idea is what it comprises.
Could you go to that slide, please, Aditi, and can you put it in a slide mode?
Yeah, the slide, I don't remember it's number 7 or number 5, yes. Says it's on the risk management section. Yeah.
Yeah, it's just going into slide mode. You guys can keep talking.
Got it. So sorry. So you're again. So statement of intention regarding ENS is the question. The question is, what does that comprise?
Yes.
Or why do we have that? Yeah. I mean, again, I think consistent, and you can see based on the rating, it's a yellow versus a red. So really, this is again some sort of either policy framework, a code, whether code of conduct, code of ethics, overarching statement around the financial institutions' intentions to put in place an environmental, social governance management system, Again, obviously useful, something that signals that this is an important aspect of the institution's operations. But the reason, we have it as a yellow is, statements and intentions can be made, but of the real understanding of whether an institution is applying this is in application. But this again, I think we feel like is an important part of a financial institution signaling that integrating ENS issues is part of their risk management framework.
Thank you. So the idea is about intention, and when we have to compare this intention with the practices, what's your recommendation?
Yeah, that's a really good question. Aditi, do you want to talk a little bit about how you folks are actually scoring this in terms of what the thinking is around the methodology? How would you score something like this, or how would you score actual performance on the ground?
Right. Thanks, Satya. So as Satya said, as we said, we've developed a scoring methodology. We've come up with, so these colors signify the level of impact on performance, and these colors have been converted into a numeric weight. And so the way we've been thinking of scoring is one at the level of performance. And to answer one of the other questions on corroboration, really the publicly available information that we use to score these indicators is annual reports, sustainability reports, bond prospectuses, anything that's out there, company information, if they've disclosed a code of ethics or whatever. So we convert these scores into weights. And each indicator is scored on the basis of performance. And we've developed a very extensive scoring guide ranging from, in terms of score, a -3 to a +3. And for each of those scores, we've said, depending on the indicator, given a guide as to how to score performance. But we've also thought of disclosure scores, and we've also given scores for whether a company actually discloses information or not. They get a slight bonus score if they disclose. They actually lose points if they don't disclose. And the idea behind that is to encourage them to disclose. And then also the quality of disclosure, depending on how they've disclosed, whether the report that they disclosed through, if it was a sustainability report, if it was audited, they get more points for that. So that's a very quick recap of how we score. Happy to discuss this in much more detail for anyone who wants to reach out, but I am mindful of the time, and we do want to spend some time with Arabesque. So if it's okay, maybe we can hand over, and then, as I said, for anybody who'd like, from the IFC who'd like to discuss this more, please do reach out. So very quickly, it's my pleasure to introduce Simon and Ina. We've been working very, very closely with them. They're both directors at Arabesque, and I'll let them introduce themselves and ESG book. So please go ahead, Simon.
Thank you, Aditi, Felipe. Thank you for having us today for this event. Very exciting initiative, and we're proud to be a part of it. We share in the vision of promoting transparency, supporting disclosure, and making this publicly available. And so look forward to showing you the platform now. Aditi, I think it'll be easy if I just share. Let me try now. Does that come up?
Yes, thank you.
Yes. Okay, cool. So for those of you who have not been to esgbook.com, please go and have a look. There is a lot of information here about the platform itself, how we're trying to do things a little differently versus the status quo in promoting disclosure of non-financial information, some of the founding principles of the platform, some introductions from yourselves, also a message here from the UNGC, and then of course Daniel, and some of the initial founding partners. So if you scroll down here, you'll see we've really tried to assemble a unique group and a mixed group based on either a global financial organization, large investors, large corporates, and large banks, each coming to the issue of disclosure from a different vantage point, but all share in the vision of the platform and all are committed to helping drive adoption to ESG Book and help it realize its full potential. So come and have a look here. But then just diving right in, if we sign in here in the top right corner, the platform will pop up. This is the landing page. And we'll keep coming back to the two sides here of the same coin. So on the left-hand side here, in this sort of medium blue color, is the ability for a corporate to disclose on behalf of itself, right? So with respect to corporates, we know that they are overwhelmed by the disclosure burden placed on them annually. On any call that Ina and I are on, you'll hear about how they have disclosure against the dominant frameworks, but then there's just a host of ad hoc Excel-based questionnaires that come inbound that they have to respond to. And often they're disclosing the same data point in 35 different places. So could there be a tool which would allow a corporate to come in, intuitively make their way through the dominant standards and frameworks, upload source documentation, and choose when to push that information publicly? So that is on the one side of the coin. On the other side, of course, is an investor, an asset owner, asset manager, who might be looking at analytics on their portfolio, or more importantly, might have a raw data need. And this then allows the ability for that investor to request for that information directly from their underlying portfolio holdings. So it's really this conversation, this exchange of data between a corporate producer of sustainability data with an investor, asset manager, asset owner, lending bank who is consuming that information. So that's the start. That's some initial framing. Easiest way to look at this is to pull up a company, right? So if I just go, and I will come to the IFC companies in a moment, but just as a starting example, if I pull up Apple, the landing page shows some initial high-level statistics based on our scoring solutions. So you see an ESG score with the underlying 3 pillars, a GC score to the right focused on the principles of the UNGC and the 4 underlying sub-scores there: human rights, labor rights, the environment, anti-corruption, and a temperature score view. Then on the left, you can go a little deeper into each of these scores to see a bit more granularity and performance over different time periods. Similarly, on the GC, on the temperature score, which looks to see relative alignment to Paris at 2030 and 2050, with a few additional indicators we can touch on. But here, more importantly, disclosures, right? So this is raw data that we have pre-populated and loaded onto platform over different reporting periods based on our frameworks. These are our modules that our data team have collected and loaded onto platform. In time, what you'll see is direct disclosure from a corporate on the dominant standards and frameworks. So a SASB module, a GRI module, perhaps the IFC performance indicators, and within each you can open them up. So you can see the raw data on platform, go into the framework. Every blue dot, there'll be a disclosure, and you can make your way through. And here on the top right corner, you'll see this was collected by Arabesque. But as we drive adoption, so you'll start to see disclosed by the corporation as you make your way through. So that's on the company view. I'll touch now on the frameworks, and after an initial introduction, I'll also hand over to Ina because she is our regulatory expert within our research office, is deeply familiar with each of these frameworks, was also instrumental in helping to refine the IFC performance indicators. So she can touch on these shortly, but on the top, you'll see our 3 raw metric modules that power our scores that we capture. But more importantly, down below are the dominant standards and frameworks that we are starting to load. Each are in their exact form. So if I open up the IFCs, here you'll see the performance indicators for corporates and financial institutions. You can open them up and make your way through exact questions themselves. So if a corporate wanted to come in, you would KYC them. They could come to the frameworks page, choose the frameworks they wanted to disclose against, make their way through those frameworks, uploading source documentation, and then choosing when to push public into the public domain. The corporate would have full control of what data was on the platform on them. Just briefly, I wanted to touch on some portfolios. So similarly, and I've just loaded a sample here of this morning, just some of your corporates, but you can look at performance statistics relative to the universe as an investor. So just as we looked at Apple for each of those underlying scores, here we're looking at the performance of this US large cap sample relative to the universe. Again, on each of the score dimensions. But then importantly here in the company section, you start to see the companies in the portfolio. You can filter on different metrics, but the disclosure button is most helpful. So let's say I wanted these top 4 to disclose, let's pick a framework, let's just choose SFDR, choose a reporting period. You type in the dates exactly, or name the reporting period. To create this disclosure now, if I push this button, these corporates would then receive an email saying that investor X, large asset owner investor, is requesting your disclosure on a particular framework for a reporting period. Please log into platform and load that information onto platform. And this is what we will start to do shortly with the performance indicators. So to jump started, we have loaded the performance indicator data onto the platform. But what we really want is the corporate to come in, verify what we have collected on them from publicly available sources, and tweak if necessary, and begin to use the platform and publish their results on a go-forward basis. So if I pull up Axis Bank, for example, and I go into the disclosures, here you'll see the frameworks that we've loaded. Some are ours, and here are the performance indicators at the bottom. So if I open these up, you can now see the answers to the financial institution performance indicator framework for Axis Bank. So you can open it up. Wherever there's a blue dot, there's a disclosure captured by us and the source documentation included, and you can just make your way through. Similarly, for any of the banks or questions that we've loaded onto platform already. So I'll pause there for a moment. I want to come back to the frameworks, and Ina, maybe you can just give an overview and also touch on some of the WBCSD work and RepX library that we're also working on to enhance functionality.
Thanks so much, Simon. Really great to be here and really coming full circle, as I was one of the team members actually holding the pen on our IFC RFP a few years ago. So it's been amazing working together with the team and seeing that project come to life. So definitely great. And just building on Simon's point, you can see here one of the key principles that ESG book was founded on is this framework agnostic principle. This means that we don't want to dictate to companies which data points they should be reporting information on, but rather we want to enable them to report information on all the dominant standards and frameworks that you can see here. Essentially, the IFC performance indicators, of course, are part of them, but we have other frameworks and standards such as the Global Reporting Initiative or SASB, which is the Sustainability Accounting Standards Board, and also Vladimir mentioned earlier a growing regulatory demand. And for this, we have, for instance, the SFDR framework. This is one of the European frameworks focused on data disclosures by asset managers. So with that, we have essentially made available all those indicators, quantifying them and making them digital, which is one of the key obstacles that corporates are facing in trying to navigate the growing reporting space and reporting burden. But with that, the other side of the coin is the interactions between the frameworks, because by being framework agnostic, it means that we are enabling multiple frameworks and multiple disclosures, which in essence is actually growing the reporting burden. But the other side of the coin is that we have this translation mechanism behind the frameworks that is enabling us to actually cross-populate data that has been submitted on the dominant frameworks and standards and is overlapping. So as we know, there is always a certain amount of, for instance, emission information that is being disclosed by companies or certain corporate governance indicators that are common across all frameworks. This, as Simon mentioned, is building upon a project we've done with WBCSD, the World Business Council on Sustainable Development. They laid the foundations of this mapping exercise, essentially looking at a mapping between indicators, standards, and frameworks, which has resulted in a large consolidation exercise between the dominant indicators that are prevalent across these frameworks. So this is one of the key features that we'll be also enabling on platform going forward. We have already identified a core set of indicators that are widely used across these frameworks. So if a company provides its emission information under, for instance, the GRI, then it will be able to also cross-populate that for other relevant disclosures. And this is again one of the key objectives, is to ease the reporting burden rather than add more to it, because we know that corporates are increasingly subject to multiple requests from multiple stakeholders, and this is really one way to make the process a little bit more efficient. And another feature that we are also building on from WBCSD is a global regulatory map. So this will be another feature available on ESG Book, showcasing the dominant ESG reporting regulatory disclosure requirements applicable around the world. So this will be, again, one of the provision library, we're calling it, functionalities that we're making available over the course of this year. So the current version of ESG Book, as you see it now, it's an evolving disclosure interface, which will continue to be enhanced over time with different functionalities and also different capacity building resources available for both companies and investors to make use of this data. Over to Simon again.
Yeah, so I want to leave time for questions, but it's really the ability for corporates to come in on the left, control what they are pushing into the public domain and house it digitally, so that they're not duplicating efforts with multiple requests inbound in ad hoc Excel-based questionnaires. We will also start to add functionality for corporates, advanced reporting, for example, where they can begin to benchmark themselves against peer groups or the sector based on disclosure on some of the dominant frameworks. And then for asset owners, asset managers, we hope that this over time becomes a go-to source for raw data, right? If you were a large lending organization and as contingent on a prospective borrower to receiving funds, you wanted them to come in and disclose their IFC performance indicators, for example, you could create your portfolio, upload it, highlight them as I did a moment ago, select the IFC framework and request. And all those corporates would then receive an email saying that investor X or bank X was requesting your performance indicators. Please log into platform to disclose them, right? And so they can do that once versus in a streamlined way versus just manually over email or one at a time. So it's these two sides on the dominant frameworks. As Ina pointed out, we're agnostic. We will add frameworks over time as the regulatory landscape evolves, but these are the ones we are starting with. And the push for this year is to now drive corporate adoption and to enhance platform functionality such that we make it intuitive and easy for corporates to come in and disclose and navigate through the frameworks. I'll pause there for a moment. Felipe, Aditi, I don't know if that triggers any questions or if there are areas you'd like us to dive deeper into.
Yeah, thank you so much, Simon and Ina. Really nice to see that. Even though I've seen that a few times presentation, I never cease to be impressed with how well this is growing. And oh, look at Lei already helping me out. Lei, thank you so much for jumping in. It spares me to try to fill the silence again. I think Lei learned a lesson and decided to jump in quickly. But
yeah,
let me just to conclude, I'm always amazed to see how well this ESG book is progressing, and that we're finding new uses to it as it grows, which is really incredible. So, Lei, just please go ahead and ask your question.
Okay, yeah, thanks. Hi, Simon. So thanks for the demo earlier. So in your example earlier, so that was an investor request for companies to disclose. Is that correct?
Yes.
Yeah. So exactly. Upon the receiving request, is the company will come in, self-evaluate themselves based on the criteria and provide the documentation to support the self-evaluation. Is that correct?
Correct.
So would the underlying documentation be disclosed or only the rating be disclosed? And also, will you validate the self-selected rating? So what eventually disclosed is a validated rating or self-rated rating? That's my question. Thanks.
So I'll try hit those. So this is a self-disclosing portal, and we require that a company upload source documentation as they make their way through a framework, right? So it is a critical piece of value for clients and for capital markets that each data point, raw data point on ESG book has its underlying source documentation, the table and page number from which that data point came, right? It also helps the corporate in future years because they can see what they disclosed in a previous year. So the company is disclosing, they are uploading source documentation. For our raw metric library, we of course have a thorough, deep quality control process, right, with a lot of tech validation along the way to ensure that the accuracy is of a standard that we hold ourselves to, if you will. But we are not verifying each data point with the company, right? If a company is putting out information into the public domain, we are taking that at face value, but we're just ensuring that we've captured it correctly, and we're making sure that we attach source documentation. So if I'm a corporate and I come in and I choose to load my IFC performance indicators, I will make my way through that framework. I will upload source documentation as I go. And when I'm happy, I'll push public, and then it's in the public domain, right? And that corporate is in control. So part of this systemic problem with ESG data disclosure is also the nature of the ecosystem. You know, at the moment, a corporate is gathering all the information on themselves in Excel, putting that into a glossy annual sustainability report, pushing it public. The data vendors are then scraping that information, mostly accurately. At times they make mistake or incorrect interpretation, back into Excel and then selling it to the market. Here we want to strip out that middleman. We want the corporate to be in full control of its non-financial data in the public domain. And so that is the vision of the platform and what we're sort of all aiming towards.
Okay, thanks. This is helpful.
Simon, can you speak? Thanks, Lake. Simon, can you speak to maybe the fact that you're thinking of including assurance features, so that there will be a way to verify some of this information if a person wants?
Yes, I mean, so there are a few levers. The first, of course, is that we would hope that a company has an incentive to disclose accurate information into the public domain, right? So that is kind of the first pillar, if you will. Then, of course, there's source documentation. And now more recently, we are in discussion with the Big Four accounting firms for formal assurance. So those are the three main drivers, right? But we're all at the mercy of this problem today in the current landscape, right? No one is assuring that Apple's Scope 2 emissions that they've disclosed in their sustainability report is indeed their Scope 2 emissions, right? What we want is accurate capture, but we are moving towards formal assurance of these data points. And this, of course, will really be accelerated as more and more of this becomes mandatory and less voluntary, like with SFDR. Because SFDR is coded into law, it's going to have far-reaching implications versus a lot of the disclosure now being voluntary in nature. So those three pillars, Aditi.
Thank you.
See if Vladimir
has
a
go
question.
Ahead. Yes.
Yeah. Thanks, Simon. This is really interesting in particular, but you kind of answered my questions on the assurance, because I wasn't sure how basically to provide whether this information the companies provide is this accurate or not, and how to check this. But also, I think this would be then in line with the new European corporate sustainability disclosure directive, which provides a mandatory assurance. So this is a positive direction that you're leading. I'm also curious to understand how to, but this is a more technical question, how is this application is going to be used, for example, by us, IFC staff, in the same way that is being used by companies in terms of logging access or similar? Because frankly, I tried to enter the platform, but I couldn't. So probably it's I need to register, right?
Yes, you do.
Okay.
And you just sign in on the top, and what happens is we have a customer-focused product team that is just fielding all the inbound requests for access, and we do some initial screening. We don't want it; there must be a corporate email address, so no Gmails or anything on the platform, and we haven't opened it up to competitors just yet. But assuming you hop over those two bars, then everyone is welcome to have access and see exactly what I saw now.
Okay.
Right? So you could find an
IFC company,
question,
yeah.
Load up what I showed you now. I'm in the public view, right? So I just grabbed some of the companies that we've collected data on. I made a sample portfolio, and then you can just make your way through the performance indicators that we've loaded on that company, right? But when a corporate comes in, so we're actually having this discussion. This is a live discussion now with Apple, because they came to us and were quite frustrated with, what do the third parties have on me? What do you guys have on me? How are you using it? And we introduced this, and they were like, wow, I can control it. Then I know exactly what you're consuming, right? So in that CSO or treasury team, we have assigned 3 people for admin rights, right? So as soon as a user has admin rights, so if you were admin for the IFC, you would have the ability to disclose on behalf of the IFC, right? And only you. So you'd have a ton of users, but only a few admins. And then all control is given to the admin user at that corporate. Does that answer your question, Vladimir?
Yes, thanks.
Okay. Okay. Chuck.
Yeah, I have a comment, not a question, and I want to return back to the question on assurance, because it's very important, and we are going to see more assurance, especially if the IFRS Sustainability Standards Board starts developing sustainability disclosure requirements. You're going to see a lot more assurance over those standards. Just yesterday, I was reading an IFAC survey. Now, IFAC is the organization that promulgates international standards on auditing, and they also promulgate the standard of assurance over non-financial reporting, which would apply to sustainability reporting. And what they found is they did a global survey of like 1,200 companies. Only 51% of those companies surveyed that had sustainability reports had some level of assurance over them. And most of them were in the EU, and most of them were French companies. And I think the other thing to note, of those 50% companies, 80% of those statements that were assured only had limited assurance, which is a lower level of assurance than reasonable assurance. If you think about a financial statement audit, it's reasonable assurance. And there is a level of reasonable assurance over sustainability reporting. It's definitely in the minority of those half of the world's companies with sustainability reports that are being reported. And the other interesting thing to keep an eye on, as Simon mentioned, the big four companies, it varies by jurisdiction. You know, if you look at the US and Canada, it's like 99% of companies providing assurance over sustainability reporting are your audit firms. Compare that with, say, South Korea, where it's a minute percentage, and there's these other assurance providers providing this type of assurance. So it's going to be a very fast-moving, but a very important topic, and we do account for that in the scoring of the indicators. As Aditi mentioned, we have a coefficient for quality of assurance. So please watch it. It's going to be easier for you in Europe, though, as the data shows. It's a hot topic, and it is a massive business opportunity for the auditing firms. So we will match the market's enthusiasm and do our part along the way, right? By making sure that source documentation is captured accurately as we move into kind of a formal assurance world. The whole industry is not unique to us, right? But yeah. Let me, just, my last point on this is, as an investor or as a corporate governance service provider, and if you're reading these statements, you better open your eyes up and be keen, like Aditi is now, where she can spot limited assurance in 3 words, you know, and the difference between, you need to start paying attention to the language. And if you really want to get smart on the language, I would recommend that you read ICE, which is the international ethics standard promulgated by IFAC, number 3000, which lays out the rules for it and gives example of the languages you ought to be looking for. Sorry, Ina, you had a comment.
Yeah, just I wanted to just briefly add that the assurance landscape is also rapidly evolving, similarly to how the ESG data landscape is following the financial data reporting landscape. So we'll see a lot more consolidation in the standards, but also the assurance requirements mandated by regulation. And actually, this level of assurance of reasonable, limited, or no assurance is something we already collect as part of our raw data indicator. So as the background checks for the data collection, we also collect that assurance level to make sure that if there's a high level of assurance, that gets captured as well as part of the entire tracing of documentation sources and the entire trail of evidence, essentially. So we'll see higher quality of data, hopefully higher availability of data, and yeah, hopefully more integration into investment decisions.
Thank you, Ina. Look, we're right on time to finish this presentation. I wanted to thank especially Simon and Ina for joining today and meeting the IFC team. Hopefully there will be more opportunities to interact with everyone. Also, thank you, Atia and Chuck and Aditi for doing the presentation. And look, this is a really cool space to be in. I'm glad we are in it with IFC. We need more of you to be involved, and hopefully this will help more colleagues from CEG and other areas of IFC to jump in as well. So thank you, everyone. Have a great rest of your day or evening, and we'll see you again shortly. Thank you so much.
Bye-bye, everyone.
Thank you.
Thank you.
Bye-bye.